Principles of Accounting 2, Chapter 1. In Chapter 1, we're going to look at a lot of definitions for cost classifications that we'll be using throughout the semester. So Chapter 1 again starts with that difference between financial accounting and management accounting. So we know that financial accounting is for reporting financial information to external parties. This is accounting to create financial statements, our journal entries, our daily work, and payroll management, all of those things that were covered in Principles of Accounting 1. With managerial accounting, we're trying to look at information in different ways so that we can make decisions about running our business. So one of the things that we will do is assign costs to cost objects. A cost object is any item that you want cost information for. For example, if I'm a service company, say a hair salon, a cost object would be a haircut. So how much labor, electricity, water does it take to do a haircut? Another cost object might be for a color or a highlight on a person. Again, how much labor, energy, utilities, water, product, hair coloring, direct materials does it take to do a color? A cost object in manufacturing could be anything from a cell phone to a car or a bike, whatever product we're manufacturing. The costs that we assign then are the different things that are required to make that cost for that product or service. We're going to be looking at the accounting for costs in manufacturing and service organizations. We're going to prepare some financial statements. We don't have as much financial statement preparation in Accounting 2 as you did in Accounting 1, but we will show how our information appears then on financial statements. We're going to be predicting how cost behavior changes in responses to activity and making decisions out of all of the information that we have. So the next couple of slides are going to be a lot of vocabulary about different cost classifications that are available. So the first cost classifications we have are direct costs and indirect costs. So direct costs are those that can be easily and conveniently traced to a unit of product or service or cost object. These are generally direct materials and direct labor that are needed for the product or service. Indirect costs are all of these random costs that can't be easily traced to a unit, a single individual unit of product, but they're necessary for the business. So an example of that might be a manufacturing factory. So how much rent goes into each individual product isn't an easy thing to trace. So we say that rent is a common cost that's required for all production, and that ends up in overhead. How we allocate overhead to products is something that we're going to look at in the next couple of chapters. Direct materials are required materials as part of the item, that they're easily and conveniently traced. Now, when I say easily and conveniently, I mean with some indirect materials, you could trace how much a product uses of an indirect material, but doing so would take so much time and effort that it's not worth it. So that's where the conveniently traced comes to. This example, a radio installed in an automobile. Other items in an automobile that would be direct materials are the tires, the steering wheel, seats, the engine. Those would all be direct materials. Direct labor is the labor that is part of production. So this is factory workers in a service industry. It is whoever is providing the service. So if I have a service industry such as a hospital, the nurse or the doctor would be direct labor. But the administrators would be indirect labor. In a factory, the assembly workers or the line workers are direct labor. The supervisors are indirect labor. So manufacturing overhead is this big pool where we throw all of the costs that are not direct material and direct labor. This is indirect materials, indirect labor. So those materials that it's not cost efficient to break down how much is used in any individual product. It's our indirect labor, such as supervisors, accountants, marketing, all of those costs that might be part of production. We have a manufacturing supervisor, but that supervisor is directly putting things together in the manufacturing plant. They are indirect labor, rent, depreciation, utilities expenses, all of these things end up in overhead. Overhead is then allocated to individual products based on a formula that we calculate. There are multiple different ways to allocate overhead to products, and we'll be learning those over the next couple of chapters. As I said, these are just some examples of overhead. So it's only indirect costs that are part of the manufacturing process or part of the required service. Other costs become period costs, which we're going to talk about in a couple of slides. We also have prime costs and conversion costs as cost classifications. So prime costs are direct materials. Direct labor is both a prime cost and a conversion cost, and manufacturing overhead is a conversion cost. So the difference between a prime cost and a conversion cost is a prime cost is a raw cost. It's just the cost of the item. So in direct materials, tire for an automobile just costs a certain amount. It's its prime cost. Direct labor. If we pay our laborers $15 an hour, our prime cost is $15 an hour. Conversion cost is the cost of converting direct materials into a finished product. In order to do that, we need varying amounts of direct labor and manufacturing overhead, which, remember, the manufacturing overhead are things like the factory rent, the factory utilities. We need electricity, we need a supervisor, we need a building, we need machinery, all of that stuff in order to convert those raw materials into a finished product. Non-manufacturing costs are selling and administrative costs. So these are all the costs necessary to sell and market our materials, our administrative costs, such as human resources, information technology, the accounting department. Those are all administrative costs. They can be direct or indirect depending on what exactly our company is doing. So then that's where it gets confusing too. So if I'm manufacturing cars, then accounting is going to be indirect labor and an administrative cost. If I'm a CPA firm and I provide tax preparation, accounting is a direct cost and part of my service. So sometimes it gets confusing as to whether things are direct or indirect costs, and we really have to think about what is the purpose of the cost. Is it ending up as part of the product or service that we're offering, or is it a necessary component of the product or service, but it's not directly a component of it? Product costs are all those costs that are involved in acquiring or making a product. A lot of the calculations that we'll be doing this semester will be looking at product costs. Manufacturing product costs get separated into three different categories. Raw materials. Raw materials are any materials, direct or indirect, that end up in our final product. Work in process are items that were started but not completed at the end of the accounting period. So for example, if it's December 31st and we're getting ready to close our books for the year, we might have products that were in production that weren't finished and won't be finished until January. Those end up in work in process inventory. And we have to calculate what percentage are they complete in order to associate a cost with that inventory. And then we have our finished goods. Finished goods are fully complete goods that are completed and have not been sold to customers yet. When finished goods get sold to customers, then they become cost of goods sold. So we can see on this slide how we transfer product costs through the manufacturing process. And we'll be doing this in chapters 2, 3, and 4. So we have direct materials. We purchase direct materials. When we start production, we transfer those costs from raw materials to work in process. That's a journal entry. So we are going to debit work in process and credit raw materials. That's transferring work into production. Then we add direct labor and manufacturing costs to our work in process account as they're used to convert those direct materials into finished goods. Once a product is finished, we transfer the full cost of that product from work in process inventory to finished goods inventory. There it sits until it's sold, and then the finished goods get transferred to cost of goods sold. Of course, this is much easier in practice. So when we start doing application problems, and you can actually see the flow of costs through the production cycle. The next classification of costs is whether we have product costs or period costs. So product costs are those costs that become part of our product or service. They are also called inventoriable costs because they end up in our inventory on the balance sheet as finished goods inventory or merchandise inventory, and then get transferred to the income statement as a cost of goods sold. Period costs are all of those selling and administrative costs that end up as expenses on our income statement. So this would be rent expense for our office building. So this is again where cost classification can get confusing. Rent expense for our office building is a period cost. It's not involved in the production. Rent expense for the factory is part of production, and that ends up in manufacturing overhead, which ends up as a product cost. So we really have to think about all of these cost classifications and where stuff gets sorted so that costs end up in the correct places in time for the financial statements to be prepared.